Welcome and thank you for joining us for this webinar hosted by the Committee for Ballarat. My name is Michael Poulton. I'm the CEO of the Committee for Ballarat, and today we're here to discuss the economic impacts of COVID-19, the shock, the stimulus and the recovery. I'm joined today by two guests, David Robertson and Beth James. I'll introduce them shortly to you, but before I do, I'd like to start by acknowledging that today we meet on the traditional lands of the Robertson people. I thank them for their custodian of this country and pay my respects to their elders past, present and emerging. I'd also like to welcome any other Aboriginal and Torres Strait Islander people we have joining us this morning. To our Committee for Ballarat members, to our LWR 20 and LWR alumni, thank you for sharing your time with us this morning. To our guests, we bring together this morning David Robertson and Beth James. David is the Head of Economic and Market Research for the Bendigo Bank. He's an experienced banker, having spent 18 years with Bendigo Bank, and prior to that, he worked as a senior role in Treasury and Finance with Colonial State Bank and First Chicago. Started life in 1989 as an exchange trader, so interesting time for you, David, in those early years. David will share his insights with us today from this national and national perspective. Beth Jones is the Chief Executive of Regional Development Victoria and Deputy Secretary, Rural Regional Victoria. As the first female CEO of Regional Development Victoria, Beth brings a wealth of experience in program delivery, regulatory reform, industry communication, policy development and emergency management. Beth's insights today will be of a particular note in terms of the regional Victoria level. We invite you all to submit any question and answers that you might have via the Zoom Q&A at the bottom of your tab. But I think for now, let's get straight into it. David, we'll start with you, and I wonder if you can outline for us some of the key economic decisions that have been taken at the national level that have eased the shock of the pandemic and, importantly, have stimulated recovery.
Thanks very much, Michael, and good morning. So, look, I think probably the first thing to remind ourselves with this economic crisis, and it's a global contraction of the likes that we probably haven't seen since the 1930s, but we do need to remind ourselves that it's first and foremost a health crisis. And so, in terms of the policy response, the first thing that needed to be dealt with was the health crisis and the risks from the global pandemic. And so I've got a couple of slides to talk to some of these points. But you know, if we think about the health response, it's clearly been very effective, and the fact that we've managed to not just bend the curve, but really end up with a mortality rate that is so much lower than the rest of the world. And in fact, when we first identified COVID-19, it was first being considered just an issue for China. Then we saw what the devastating impact it's had on Europe and then North America, and now even the epicenter probably spread to countries like Brazil. But I think the policy response that was so decisive around the need to shut down the economy has been so beneficial in through the social distancing measures in containing the virus. Then, obviously, with that intentional shutting down of the economy, which means we can reopen it faster and with less risks of a second wave of infections than would have otherwise been the case. Now it's a case of how effective have the fiscal responses been. And, you know, that's where, through JobKeeper, JobSeeker, and the range of federal government responses, and again, the fact that the federal government was able to set up the National Council, so cooperation through all the states, it's been pretty impressive to see. But throwing 10% of GDP at the economy, you know, it's not something you necessarily expect from a fiscally conservative government. But that's exactly what you need when you have a crisis along these lines. You need to throw fiscal policy at the, you know, to build that bridge between where we were in February and where we're hopefully going to emerge at the end. Well, when I say at the end, in September, October. So I think the combination of that strong fiscal response, 10% of GDP, 60 billion maybe they're available, but we can come back to that. And then on top of that, then you've got the monetary policy response through the Reserve Bank, through rate cuts. On top of that, the the industry response with things like financial institutions like ours offering 6-month periods of interest rate obligations. So there's a wide range of support. As for the economy coming out the other side, I think we're really just going to need to see the data as to how effectively that has built that bridge. And then we get the longer term issues around needing to, deliver things like structural reform, the longer term recovery, as opposed to just this short term economic contraction.
Can I take you to 10% GDP and the strength of that economic stimulus from the Australian government point of view? Can you perhaps put some insights into that in terms of where you've seen overseas markets go and the difference perhaps between the Australian government's response at that level versus some of our international competitors?
So I think in terms of the fiscal response and in fact, quite well compared to around other countries, with the, so just clarify, you're asking about the 10% GDP.
Yeah, how significant is that when you start to compare where other countries have gone?
Yeah, absolutely, and I think the effectiveness of the policy there will be able to constrain the fall in GDP. But a country like the United Kingdom has said that they're looking at a 20 to 25% contraction in their economy, and again, that's where the relativities and how they cope with the crisis start to come to the fore. But a 10% contraction in our economy, it's remarkable, really, when you consider the GFC, the economy only contracted 0.5%. I think the relativities are important, and the fact that we're in a strong fiscal position going into the crisis. We've had the fiscal packages, and now we've got the opportunity for the recovery, or the conjecture about what that recovery might look like. But comparatively with North America, with Europe, with the UK, I think we'll find that our GDP contraction will be slightly more benign and manageable than some of those other countries.
And before we go to more of a regional Victoria, perhaps can you just elaborate a bit further for us on your thoughts around growth and the impact of that?
So again, the chart on GDP growth from the Reserve Bank does show that the Reserve Bank's modelling talks to a 10% contraction, and then there's a range of factors that are going to determine how sharp the recovery will be. And some of those factors, we simply don't know how effective the policy response will be with growing employment. We don't know when a vaccine will be successfully deployed and made available. We don't know the damage to global supply chains. So some of those questions, no one knows the answer to, unfortunately, and therefore all we can do, as the chart shows, is that modelling of what the GDP recovery profile might look like. Now, in the Reserve Bank's sort of upside scenario, it's a definite V shape, and the converse of that is what happens with unemployment. But I think we'll need a few stars to align for that to happen. I'm not dismissive of that scenario. We'll just need a few things to go right for that to be the outcome. Their downside scenario is definitely a U shape, and it probably more closely mirrors what happened at the end of the 91 recession, where it really took 3 or 4 years before we recovered. And again, given this is a global pandemic, what this is going to do for offshore demand is so difficult to anticipate. And I've got some confidence that, as I said earlier, even Asia is coping probably better with this crisis than North America and Europe through a few different lenses, means that our trading partners perhaps will be in a better position to help with the recovery, but it's not going to be easy.
Great, thank you. Really interesting insights. Beth, I'm just going to sort of wind us a little bit more to the Central Highlands, the regional Victoria. The impact of the shock, and let's talk first about the impact of the shock, and pleasingly, we haven't had the health impacts that we thought might have been. That's a fantastic result for us. So if we think more about the economic impact that we've seen in regional Victoria first, and then we'll think more about the stimulus and response.
Yeah, thanks, Michael, and also great to be here. And you're right, certainly from the health perspective, it hasn't been as good as it could have been. Certainly economically and from a social and economic perspective, of course, we've seen impacts across regional Victoria that vary tremendously, as you'd expect, given the different structures of different regional economies right across the state. I guess at a more global level, in terms of what we're seeing, obviously food export, tourism, the food and accommodation sector, hospitality, retail, have been sort of areas that have been particularly impacted, and also arts and recreation services. I think taking that down to more sort of local than more central islands, I think very much the food accommodation has been something of major impacts. Tourism industry, of course, and I think more locally probably retail, construction, manufacturing to an extent as well. I think for regional Victoria, it's also off the back of it's been a big year in many respects. So parts of regional Victoria coming off the back of drought, bushfires, and I think for many parts of regional Victoria, that's just been such a compounding impact for some of those industries, obviously tourism, retail, and hospitality. That's sort of the really big recovery opportunities for a lot of that bushfire affected areas. So I think they've been sort of the big impacts from a more local perspective.
So in terms of what you're seeing from the impact of the stimulus now, and clearly JobKeeper is a significant part of that, particularly hospitality and tourism and accommodation services and so forth. More broadly, you're seeing some of the impacts that stimulus at this point in time in region Victoria?
Yeah, so I think stimulus is going to take time to work through, but yes, certainly already, and there's been a lot of focus on stimulus from a Commonwealth and state perspective. JobKeeper, of course, being a Commonwealth intervention. From a state perspective, there's the initial survival package that had the focus on really trying to survive and stabilise the economy. So that was around the Working Victoria scheme, which is already seeing in excess of about 4,500 jobs. So these are people who've been whose employers have been displaced by COVID and been matched with employers who will look for new employees. So that's been a really big and important program. That's also got a focus in regional Victoria in the ag sector, particularly in food production. Also, government's just in recent weeks a big focus on stimulus for schools, tourism, sport, community. I think they're 2 weeks, 1 or 2 weeks old, so we'll start to see the impacts of those. But last week there was a $2.7 million announcement around a range of sort of shovel-ready infrastructure, focusing on schools, tourism, and a lot of regional infrastructure. I think certainly for the Central Highlands region, a lot of beneficiary there from schools in Ballarat, work with early education precincts, and some local infrastructure community projects that will have immediate effects. And I think in addition to those things, there's sort of you if you like of work we're doing in regional development in Victoria that there's all the projects happening that will just continue to be stimulatory as well, and certainly the way we look at rolling them out, we're kind of doing that way too. So we had a recent last week Minister Symes, the Minister for Regional Development, announced $16 million of regional infrastructure spending, which quite a number of the government in the Central Highlands region have been beneficiaries of that. So another thing, and from our point of view, regional development Victoria, we're also just looking at pivoting all the things we do every day to help us with about the golf club construction, the Ballarat train station redevelopment. It's going to take time to see how well those things work, but early signs are there's plenty happening, and it's, I think, from my perspective and from the perspective of the regional stakeholders I'm interacting with, such a great opportunity for regional growth.
I'm going to come back to the regional growth part shortly, but David, let's just take you back a little bit to unemployment, particularly in terms of what we've learned from previous experiences. Now, clearly this is unprecedented, and the force of spending that we have is well beyond what the GFC was. What are you seeing in terms of unemployment, both perhaps the best case and worst case, and everything in between?
Yeah, so if we just look at the national level, prior to the COVID-19 pandemic, there were 13 million Australians employed and 700,000 unemployed. 13 million versus 700,000, so that's the 5.1% unemployment rate that we had going into the crisis. Suddenly we've seen within less than 2 months, 13 million down to 12.4, so there's 600,000 jobs lost across Australia. And if those 600,000 have simply gone into the unemployed column in terms of the ABS data, that would equate to a 9.5% unemployment rate. So it is a dramatic increase in unemployment. Probably the other way, or there are a couple of other things to, I suppose, other ways of measuring it. Underemployment is certainly a measure that perhaps doesn't get enough publicity. The underemployment rate picks up people who have a job, but it might only be, you only need 1 hour weekly employment to be on the employed list. Underemployment picks up people who have some work but would like more hours. And that number has gone from below 9%. It's almost from 50%. We were 14 from 9 to 14%. So obviously there's a lot of stress in the jobs market. And also the Australian Bureau of Statistics now putting out fortnightly payrolls data, which is more timely with its delivery. And also you get to see some of the trends around wages and around payroll numbers. And that actually, having had this dramatic fall through April, just started to stabilise in early May. So, maybe that's the first tentative sign that as we reopen the economy, as slowly as that's occurring, that some of the employment prospects can pick up again, and businesses, if they hadn't been availing themselves of JobKeeper, perhaps businesses can be looking at their post-COVID, strategy and how they are going to get themselves back up and running and employing greater numbers of people.
Beth, in regional Victoria, are those numbers surprising to you? Are they that consistent? And I'm interested too, because I know that from a central office perspective, you make one is actually well under control. So where are those things now?
Yeah, so consistent very much with that in terms of percentage, but of course, again, such a story across the state in terms of you look at the eastern state, where at focus, we start the season, so I think the variation across the government is quite a sustained positive. But yes, certainly if you go at that average statewide level, that 10-11% is what we've been understanding. But yeah, that incredible variation, and so from our perspective, it's an understanding very much what that means to different places, and then how you line up and connect people to the various supports and stimulus that are available, and sort of making that really localised is really important in that variation.
Let's talk to the issue of growth. I don't call it regional growth, but I think regionally in terms of our position in Southeast Asia and South Pacific, so our sort of regional status and international perspective, and Beth, our regional status from a state perspective. But I'm interested particularly in the sort of beneficiaries of the crisis. What are things that we can gain from this that we learn, and that you may see actually change as a way of people have to adapt to over the course of the last few months?
Regional, broader regional growth perspective, again, I talked about the COVID numbers and how Southeast Asia seems to be in a better position to recover than North America and Europe. And if we look specifically at our largest trade partner in China, I can come back to the trade tensions, but the recovery in China, they had their largest ever contraction in their economy in the first quarter, but it does look like a V-shape with respect to industrial production. And you can look at independently verifiable data around traffic congestion and so on. And they're almost back to 2019 levels. So a good, strong recovery in China will be very helpful, given that's where a third plus of our exports head. Obviously, Australia and of course course, Victoria and regional Victoria was very dependent on things like education, tourism, in Southeast Asia. So the recovery in that region is going to be so important. Not sure how that's going to play out in terms of education exports, right? But better that that region is recovering more quickly than struggling with its recovery. And then, just around international tourism and so on, it's obviously going to take a long time before we can get back to normal levels there. I think one of the questions will be the degree to which domestic tourism can offset, and presumably we'll be holidaying locally and no one will be tempted to go overseas, and the currency where it is plays into that as well. So, population growth has been pretty strong in Australia and in Victoria for a number of years. Obviously, a lot of that links into our strong trading relationship with Southeast Asia, and presumably this will be a slow year for population growth, but we need to get back to that 2% per annum growth rate, and that's where the last thing we need is, is a trade disagreement with our largest trading partners. Fortunately, thus far, it's mainly barley and beef exports, and that's a bad outcome. However, fortunately, that's only about 2% of our overall exports to China. We need to make sure that we're not putting at risk all the other things that we're exporting.
And you mentioned education, and again, if I think of the regional impact, the Chinese market is a huge one. Are you seeing signs that that market is looking elsewhere around the world? Does Europe become more attractive to Chinese students? I suspect the US doesn't. Are we beneficiaries because the actual trade war scenario is perhaps more significant at the US level than our own?
Yeah, and that's where it's very difficult. So I don't have a direct answer to that question in terms of international students and their propensity to go elsewhere. But, if we think about the US have been actively seeking a trade war with China. That's part of the policy platform, if you like. Australia in no way is seeking trade tensions with China. So it is disappointing that that's been an outcome, hopefully just a short-term outcome and more of a short-term leveraging, if you like. It's in both Australia and China's interests to have strong trade relationships, and that's not just through barley and beef exports and iron ore, but across the board, including those service exports. But if we think about, iron ore, for example, our largest competitor is Brazil. And Brazil are obviously having a very difficult time with COVID. So, there's one export market that continues to look strong, given the iron ore price is up at about $90 a tonne. So we've sort of got to compare all those export opportunities, the service exports as well as the bulk commodities.
Just a reminder, folks, that you are joining the Community for Ballarat this morning on our webinar, looking at the financial impacts, the shock and the stimulus of COVID-19. Apologies, we have had some audio problems I've been made aware of. I'm hoping they're getting better. Not too sure what that's about. We are at the Tech Park here in Ballarat, and hopefully we'll get the technology right. So apologies to those people. And just a reminder that please use the Q&A button down the bottom of your screen if you've got any questions you'd like to put to the group. Beth, I'm going to go to you in terms of, again, the regional opportunities. What do you see coming out of this that from a regional Victoria perspective are some opportunities that perhaps we might not have previously seen?
Yeah, look, absolutely, Michael. And we've been, the regional partnerships, as you know, there's 9 regional partnerships across Victoria, in collaboration with the Regional Development Australia committees, have been hosting a series of roundtables with community business leaders and leaders from right across all sectors. And I think we've had 4. We've got the Central Highlands one tomorrow, Michael,
Yep.
which I know
Yes.
you're involved with,
Yep.
and we've still got another 4 to come. But I think, notwithstanding, yes, there's certainly challenges that we've highlighted this morning in our conversation, but there's a real sense of buoyancy too in terms of regional opportunity around this, and that's coming out really strongly in these roundtables. And I think about sort of, we say the word innovation a lot, but I think, that the opportunity for growth and innovation in regional areas right now is more significant than I think ever before. I think it's a real opportunity. And
And you know, how does that play out? We've seen such pivoting and innovation from businesses who've responded in amazing ways to this, and I guess locally, whether it's Westlab in terms of pivoting to a range of PPE supply, the Gecko in Ballarat, and Michael, you in the community from Ballarat, fantastic story. You know, minerals processing, a business that has, you know, really taken such an innovative and important contribution to this, and shown that amazing ability to pivot. So I think, you know, there's plenty of examples of those types of innovations all around, and I think that, you know, regional businesses do that so well. So I think there's those opportunities. I think more broadly, and notwithstanding some of the, if you look at ag and the food sector, notwithstanding some of the immediate challenges, trade type challenges, I think, and whilst there's been some market contraction around that, I think, you know, in terms of the medium term, really solid. And ag being such a major contributor to regional economies, I think that's a really solid story. I think the tourism, David's touched on that in terms of, you know, there's a lot of pent up demand for people to get out and about right now, and people who would normally be looking internationally, there's definitely an opportunity here, I think, domestically for that, and being able to, you know, think about that. I think the other one that's really emerged strongly, and we've seen it with things like East Drink West in Ballarat, has just been that really strong sense of people being aware of where things are produced, local production, supporting local suppliers, and I think that's sort of opened up a whole new opportunity around really localised economies that we're seeing as well. So that combined with, I think, just a real resurgence in you know, the lifestyle that regional places offer. I mean, I know certainly doing my COVID isolation on 5 acres in Mount Rowan has been, you know, such a
little better than a 2-bedroom apartment in Melbourne.
Yeah, the livability, you know. So I think, you know, people, just this whole opportunity afforded by remote working and different ways of working into the future, and working more you know, digitally from home, that combination, I think that really opens up such a big opportunity for regional Victoria and Ballarat in particular as well.
I think that's a really, sorry to interrupt, I think that's a really good point around, you know, the property market and where demand is likely to head. Presumably, you know, we've had 40% of Australia's population in 2 large cities. Presumably, having gone through COVID-19, there'll be a number of people who'll be saying, well, I'd like to go to somewhere where I've got a bit more room and less people coughing and spluttering on me. And so I wouldn't be surprised at all if there is increased demand for regional property, notwithstanding the challenge around, you know, the jobs market.
It is a great segue, because I was going to talk interest rates and the housing sector, and you know, there is a sense that this, as Beth has used described, here's this opportunity for people to live regionally and work in the city in perhaps ways that they may not have been able to do in the past. I don't need to go in a big city office 5 days a week anymore. So are you seeing any signs from a well, 2 things. One, first from a real estate perspective more broadly, David, and any impacts on interest rates, because I think that is a significant issue for us. And again, it's a bit about crystal balling, I suppose. But then the added layer, Beth, perhaps to the regional opportunity that sits here. Perhaps David first. Well, interest rates.
Yeah, and from an interest rate perspective, great that the Reserve Bank have not just got the official cash rate down to 0.25%, so you know, record low rates for borrowers to access. But also through quantitative easing, they've brought the 3-year bond rate down to 0.25% as well. That's really been the main impact of QE. And so what that means is it's not just the variable rates that are lower, but the term rates are lower as well. So that's certainly been very beneficial. The Reserve Bank have been very clear that they don't see the need to increase rates for years, and they won't do so until they see employment reaching what they call sort of full potential, and inflation going back to where it should be, and inflation is probably going to be negative at the next read. So that's years away, and I think that does play into supporting property markets. Obviously, there's been a lot of commentary about some likely falls in capital city property values. But I think outside of Melbourne and Sydney, actually, it's going to be a relatively benign correction in property prices. And you should always look at them in the longer term trends as well. But, you know, I can certainly speak on behalf of the anecdotal evidence that we're seeing is that the demand is still there. Even though when we didn't have live auctions and so on, there was just smaller, you know, volumes of sales going through. But, you know, clearly if there's a dip in property values, then there are going to be people entering that market that weren't able to be in there before.
Beth, we've had a specific question to this actually, and it is a little bit, it's from Bill Mundy, so thank you, Bill. And it is about, is there anything in the stimulus package that is about promoting decentralisation and regionalisation because of the opportunities that perhaps the property market bring up? So 2 questions to you. One is a more broad one around what you're seeing in terms of regional living and the potential in real estate in that regard. And the second one, is there anything in the stimulus packages that you're seeing at the moment through the regional partnerships that might help promote regional Victoria?
So I think very consistent with David's observations in terms of just regional opportunity, and I just think that lifestyle, livability, safety will just be such an attractive thing, and I think now we've proved we can do it, right? That, you know, not everyone had to go to the office, and I think certainly my discussion with my staff and my observations of our own business is just there's been some pretty amazing productivity gains that sat around as well. So I think, you know, it really is an opportunity for regions, and I think, you know, as the economies focus on restart from 1st of June and being staged, I think that will just, as people get out and about, you'll sort of start to see people looking around, and it'll be interesting to see what happens to property and those markets in regional Victoria. But, you know, it all seems to be pointing in a very positive direction. So very consistent observations to David. In terms of the question, in terms of the stimulus and that sort of decentralisation, I like to call it more regionalisation, I suppose. I think it's there in a range of ways. You know, we don't have a regionalisation stimulus package as such at this time, but I think there are so many things about what's out there now in terms of infrastructure spending that just are natural benefits directly and indirectly to that sense of regional Victoria being such a great place to live, work and invest. You know, in the $2.7 billion that I talked to you about before, such a wide range of things from, you know, a focus on tourism, schools, transport, and a whole range of community and social infrastructure. I think all those things just enhance the opportunity for regional living. So I think it's there, absolutely.
I know there's at least a couple of members of Community Ballarat who are hanging on potential contracts with state government, one around building trams and one around building trains. And I guess it is the awarding of those sorts of contracts that
That's it.
It's not economic stimulus.
Combination of so many things. And yes, there's singular to that, but I think it's about the package of things that sit out there, and there's certainly such a big focus on supporting regions in that way right now. Yeah.
David, a specific question to you. Is there any data available that you're aware of where you've seen COVID have an impact on the not-for-profit sector?
Oh, not specific data. I suppose, you know, if we think about the non-for-profit sector, which is so dependent on volunteers, perhaps there's a question around, you know, the capacity for volunteers to continue their involvement given the pressures. And again, if we think about the 60 billion less that's gone to JobKeeper than the initial estimates, perhaps there are questions about, well, where could that be redeployed and whether or not more, you know, could be headed towards that sector, or whether or not that should go to casuals or any other particular sector, or should it simply be kept as a reserve for continuing JobKeeper once we get to September if the economy isn't firing. But no specific data that I can point to. I suppose if we look at the rise in the unemployment rate, certainly the largest increase has been in the sort of 20-year-old and under bracket. And so whilst youth unemployment has been okay in some areas, that's probably the area that has taken the largest hit across all of Australia. And so, you know, the community sector, obviously a lot of the effort goes to supporting youth and to supporting parts of the economy that need that support, or parts of society that need that support.
But I haven't got a specific
No, thank you.
data piece I can talk to.
That's okay, no problems. And Beth, again, a specific question to you, and it's I think perhaps captured in comment in part you made before around the regional partnerships. But the question is, how do we share and promote the collective learnings and opportunities that this has provided for us? So from a regional perspective, how do we share and promote those learnings?
Yeah, look, great question, and I think that's happening through different. There's lots of webinars and interactions. I think I feel more connected in some ways to different things through the remote world than perhaps you do sometimes through the face-to-face world. Just through the real focus on people, going above and beyond at the moment to create these sorts of sessions where people can share info and experience and share the learnings and the opportunities. So I think there's a focus on that. I think that the regional partnership roundtables are very much about that, and we certainly plan from a regional development Victoria point of view to take some of the themes and issues that have come out of that and dive deeper in terms of different industries, different sectors, different community cohorts, whether it's youth unemployment. There's a social and economic focus to that. So I think from our point of view, this gives us the opportunity to sort of have a look across the spectrum and then really getting underneath some of those things. And I think there's lots of opportunity for further discussion and learning around that. And I think the youth unemployment, the impact on young people, and that sense of community connection are coming out of the roundtables as really sort of topical issues, in addition to digital opportunities and tourism opportunities. They sort of seem to be, some of the big areas of focus for regions moving forward.
David, we had some problems early on with some of our sound, so apologies again to our audience for that. But I wonder if you can go to that slide again around growth, the RBA's slide that you had on growth.
On GDP growth.
On GDP, yes. Yeah. Perhaps just, again, just a really quick summary, I suppose, of what that slide is showing. It's on screen now, I think, for the audience. So,
Yeah, so, the Reserve Bank and their team of economists model a range of outcomes. Again, I think from a business point of view, we've really just got to be ready for a whole range of outcomes, given we don't know which one it'll ultimately be. But their base scenario shows that 10% contraction in GDP, and we've never seen that before, just an immediate 10% hit. So just an extraordinary thing for the economy to deal with. The shape of the recovery, their baseline shows around about a 2-year path back to sort of the trajectory we were on before. They've got an upside scenario, which is V-shaped. If everything goes, I suppose, as well as it possibly can around the vaccine being developed and distributed, if the disruption to global supply chains is less than feared, as long as demand from overseas continues, in particular from Southeast Asia, and also with domestic demand. We don't really know how we're all going to behave once we sort of get to September. Are we all going to, want to go and spend and be reckless, or will there be a natural conservatism given how difficult it's been? So some of those things, all you can do is model and assign probabilities to them. That's a V-shape though. And then the worst case scenario is a very slow looking U-shape. And, I think my point would be, don't be dismissive of any of those outcomes. They all might, any of them can happen. And hence the need to be prepared. But, given we're now reopening the economy, presumably we're actually at the low ebb, and it's a case of how quickly it starts to pick up and how sustainable the economy is and how sustainable businesses and demand can be.
Yeah. I have one last question for you both, but I'm wondering if there's anything else that you'd like to perhaps add to today's conversation that you haven't had a chance to do just yet.
No, I just think, Michael, just the emphasis on, there's so much happening now as the restart and the recovery in terms of stimulus and looking for opportunity. And from our perspective, the focus is really on listening to what that means for regions. It's got to be led in place. And, I think sort of moving from sort of that sort of survive and stabilise to sort of, how do you stimulate and move forward, and that resilience building into the long term, such an important community conversation. So, you know, that's sort of where we'll be focused. Bring it on, yeah. Right.
And similar to that, you know, I did want to mention the importance of the structural reforms that we're starting to see, you know, the discussions around job skill gaps, around industrial relations, and we need to extend that reform in healthcare and superannuation and tax reform and so on. So you've got the short-term response, but that's the long-term solution to lifting wages growth and standards of living.
I suspect that's another 45 minutes, isn't it?
I think it is.
We didn't quite get to the macro reforms, did we? But next time, David. But look, a question to you both, and I've prepared Beth for this one. I haven't mentioned this one to you, David, so I'll give you the benefit of hearing from Beth first. But it's a little quirky, and it kind of finishes our webinars off. But I'd like you to finish this sentence. It all comes down to...
I think embracing disruption. I had the benefit of being
Thinking
worded
about
up
this
on
one,
that
yep.
and thinking about it, but for me it was it came to me, you know, pretty quickly in terms of, I think, yes, notwithstanding the challenges that this situation thrust upon community and business and our broader economy and way of life, you know, I think that the restart is in sight. I think it's such an opportunity. You hear often about don't waste a good crisis. I was trying to avoid those words again because you're hearing it a lot, but I think the sentiment of that is so true. And I think as leaders, it's so important that we, you know, make sure we're having the conversations and listening around, you know, what are the ways of thinking differently and reimagining something different out of this. And if it's, you know, greater regional living and investment and working and living, fantastic. So from my perspective, it's about really looking to the challenges and really looking to the opportunities that we've now got.
Embrace disruption. I like it. Thank you. David, it all comes down to...
So maybe on a similar theme, there's been a lot of discussion around, you know, a COVID-safe economy. I've got a slightly different twist on that. So I think it all comes down to being a post-COVID adaptable economy and businesses and consumers being post-COVID adaptable because it's a rapid adaptation. So that's a long sentence. I could get a more concise version.
No, that's very happy with long sentences. That's right. And look, thank you both. I think we've had 60,000 years of human civilization. We've adapted always. We'll continue to adapt. And who would have thought that we would have had parents working from home as they had and looking after kids at the same time, and a whole range of ways that we've been able to adapt the ways we've worked and the ways we've cooperated and collaborated. So, David, thank you for your time coming up from Melbourne this morning. Really appreciate that. Beth, great to have you in our studio.
Yep.
Apologies to our audience where we had some audio problems early on. We promise we'll get that fixed next time round. This is one of a number of webinars that we'll do. We have another one planned in about 3 weeks' time, and we'll be in touch with the members about that. But the audio from today's session and full video will be available to you, and we'll send that out via the links this afternoon or first thing tomorrow. But again, on behalf of Community for Ballarat and its members, thank you both for your time this morning, and have a good day. Thank you very much.
Cheers.
Thank you.